Hello, welcome, Zach Howard, Rolla Page Atlantic Homestead. Here making another video on Canadian housing and looking through housing, real estate through a more macroeconomics, monetary process as opposed to traditional uh, real estate. Um, just starting this channel, so hoping to improve on the videos as I go through. If you could give me a subscribe and look to grow the channel with more videos, at least on a weekly basis. So for today's video, I want to talk about Canadian housing, looking from an historical standpoint and what we can expect to see 2024 and perhaps beyond that, looking at the price of homes through a different lens. This is a great chart here from wowa.ca. These guys have been putting out great work on the Canadian housing mortgage market. But this chart here really exemplifies what we've seen happen in Canada over the last 2 years. We've had massive immigration that even far exceeds what Canada had during the baby boom population post World War II, and even during that big post early 1970s immigration uh, increase. Roughly 1.3 and a half, 1.4 million new immigrants to Canada over the last 2 years by the government of Canada's own admission. They have not accurately tracked how many new immigrants have come into the country over that time period. So just thinking through the context of that, what it means for all things in society, not just housing, your medical system, your highways, your public transport. You've got all these new immigrants, but you don't have the infrastructure to support them all at once. And housing really speaks to that kind of a crisis situation here. We've had 2 to 3 years where we've had less than historical increases in new housing construction. A couple different factors there. Cost of materials, we had big fluctuations in pricing during the pandemic, supply chain disruption, lack of skilled labor, increased bureaucracy to get projects zoned properly, approved, uh, financing in the traditional standpoint, the Canadian or prime lenders for developers is just not there. Most developers are having to use the secondary markets. All those factors are contributing to a crisis situation where you have super excess demand and very crippled supply. With those mechanisms, you usually get an increase in price. We're seeing the lack of supply in housing and that backdrop and higher immigration carryover to record lows, vacancy rates in apartments, rental units, historically haven't been down this low ever. Most Canadian cities are seeing less than 1%. The average is around 1.5 based on CMHC's most recent data. And as such, you're seeing this huge spike up in the increase of the average rents in Canada for housing. The biggest cost of living for anyone is their housing, whether they own a home or they're renting. And with this backdrop, I would expect to be continued opportunities for landlords, investment properties, certain multifamily areas of the market. We're seeing it where I live in Newfoundland, still multiple bidding situations here for two apartments or multi-res properties, whether that's as an investment standpoint or to supplement your mortgage. But just this week, I'm hearing properties going to market for under 399, and they're going for 12, 14 multiple bid opportunities on that same day listing. Looking through Canadians' cost of housing as a percentage of their disposable income compared to our counterparts in the US, historically it's tracked relatively close since the early 80s. And then what happened in 2007, 2008, we had a breakage of that relationship of somewhat close. GFC hit 2008, the great financial crisis, and that had a big cleansing of the housing bubble that was in the US. Canada did not have that backdrop with subprime mortgages and a lot of the excess that they've seen in the US. So we didn't have that washout. And the second thing that's really distinguished the two countries' housing markets since about 2010 is really about the debasement of the Canadian currency relative to the US dollar. Our currency, in a real purchasing power standpoint, has fallen more quickly than the greenback. And I'm going to show you a few charts that kind of exemplifies that here shortly. Everybody knows The Simpsons, one of the longest running sitcoms, cartoons in the history of TV, going back to 1989 when the show first came on the air. Just 3-bedroom house, garage, two cars in the driveway. Was relatively normal in the show and for most North Americans. That was all purchased and supported off the backdrop of a one income earner, Homer, the father, the husband, who was a non-college graduate. This seemed perfectly normal for people watching the show. Fast forward to 2024, this scenario here with this house, two cars in the driveway, stay-at-home mom, this seems like luxury living in today's world. What has happened over the last 30 plus years is this continued phenomenon of increased fiat currency by central banks and thus the spending of that money to federal governments, whether that's in the US or Canada. That's the backdrop we've experienced. Up until recently, people never even heard the term inflation. It was a phenomenon in the early 80s, late 1970s. We hear about our parents, but for 20 years, it really wasn't really on the radar. Since 2020 with COVID, it has become everywhere and anywhere a monetary phenomenon, as famous economist Milton Friedman coined. But really, inflation comes back to time, the most valuable resource in the world for anyone, whether it's Warren Buffett or the homeless guy on the streets that just came to Canada from another country. There's only 24 hours in the day for both those individuals. There's only so much time in their lifetime, and how to utilize that time to live their life. It's the biggest issue right now is the amount of theft through inflation that's taken away from Canadians. Looking at this standpoint through the backdrop of housing and this dynamic here, what do we have going on? We had this excess demand with all this new immigration coming in, lack of supply, lack of competition, materials, these things I just talked about. And you had this huge income inequality gap that continues to increase based on affordability, now increased cost of mortgages, interest rates, etc. So all those three factors are playing out for this dynamic that we see playing out, that supply demand of housing, not just in certain markets, but as a country will continue to be an activity of this backdrop. Looking at housing historically from a Canadian standpoint in the price of fiat currency, and then in the point of the most sound hard money of all time, gold, 5,000-year money. So in 1999, the average price of a Canadian home was 151,000 fiat dollars. At the time, gold was $296 an ounce. You needed 510 ounces of gold to purchase the average Canadian home. Fast forward to today, this chart here on the left goes up to actual numbers for 2022 before we've seen that rapid spike up in mortgage rates, but forecast out for 2024 of the average Canadian home being $685,000. Today's price of gold, roughly $2,000 an ounce. You're looking at 337 ounces of gold to get that average Canadian home price purchase. So in 25 years, you need 4.5 times more fiat loonies to buy the same average Canadian house, but you need 34% less gold. Just speaks to the rapid devaluation of the currency, of the purchasing power of the Canadian citizen through this inflation backdrop over the last 25 years. From this chart here of the price of gold, you can see the acceleration into the early 2000s and then rapidly into the last GFC 2020 into 2024 particularly. Not just looking through the lens of the price of housing in Canada, but let's take the same exercise and look through Canada's biggest housing market, Toronto arguably could be its own country at times. It's so big and is really a backdrop for all this new immigration that's coming into the country. In 1999, you had the average Toronto home at 228,000. Back then, 771 ounces of gold to purchase that average home price in Toronto. Fast forward to the end of 2023, 1.1 million Canadian dollars for the average Toronto home, or 555 ounces of gold. So in 25 years, you need 28% less gold, but you need 5 times more loonies to buy that average Canadian home. Numbers out for January here showing the average forecast for Canadian homes by province and nationally, somewhere between 685, as previously mentioned, to 694, and then a continued increase for 2025 currently is projected at 4%. My home province, we're looking at a projection of 2.5% increase in Newfoundland to 300,000 for 2024, and then a continued approximate 5% increase in 2025. How do we get there? Really, it's a dynamic of what we just talked about at the beginning. We got all this new supply, new demand without the supply to make up the difference. Inflation, that is the price we pay for those government benefits everybody thought were free. So during 2020, 2021, into 2022, all these federal government programs got rolled out, CERB, employee retention programs, the small business financing programs offered by the government. All these programs at the time were lapped up by the Canadian public, not thinking of the long-term effects this would have. And we're seeing it play out now, whether it's through housing and shelter inflation, the cost of groceries, the cost of insurance, the cost of living has dramatically increased in the last 3 years because of this backdrop of fiscal spending with the support of the Bank of Canada. So in summary, what can we expect of Canadian housing with the backdrop of we talked about here in this presentation? We've seen a record increase in Canadian immigration, coupled with a record increase in Canadian mortgage yields, which have crushed affordability alongside a time where demand for housing has never been higher in Canada, creating a perfect storm for prices to continue to accelerate in this backdrop. If we study history and we look through the mechanisms of hard money being gold, where do we go from here? Fiscal spending, monetary debasement of the currency are in the politician's playbook, whether you're on the left side of the aisle or the right side. Whoever is in power, that is usually the flavor of the day with politicians. Inflation is the most impactful tax. It's hidden. All areas of society cannot avoid it. It's front and center. So what's the outlook? Are we going to get a new government come into power in the next 12 to 18 months in Canada? Regardless if we do, is fiscal austerity really on the plate as a political card? Very unlikely. Are we going to get less immigration? Probably a little bit, but it's still we're going to have continued immigration into Canada. Are we going to get a central bank that cares more about the purchasing power of Canadians than supporting the federal government and supporting the Canadian banking system? Absolutely not. So with those backdrops, if you're looking at the price of housing, where it's going to be in 2024 and beyond that, all that says to me, we're going to have a weaker currency. Thus, the way we measure housing will continue to increase. So outside of gold, to be able to protect purchasing power of Canadians, look through real estate, look through hard assets. And that's what I think is the only way to really survive this inflationary backdrop, which should continue to play out over the next so many years. So appreciate taking the time to watch the video, and would appreciate a subscribe if you could. Thanks.